Grexit.com. Okay, folks, a afternoon market wrap up, or should we say afternoon market insight into European indices, and let's see exactly what's happening. Okay, the Asian markets overnight, Hang Seng, Nikkei, more or less flat, to be honest with you. Okay, no real movement there substantially, although the Shanghai certainly was up by 2.5%. On slightly better or stronger economic data. Now, that certainly seems to be the case. That's fine, but then thereafter we had weaker European economic data, especially from Germany. Okay, German data, the IFO and business climate expectations, etc., all missing. Okay, we had slightly stronger data from Italy, although whether or not that has a major impact on the rest of the Eurozone is obviously questionable. It's the concern really is more to do with the German data, and that obviously came out weak. That subsequently sent the euro down, and not only did that obviously was that sent down by weaker data, we also had the concerns with regards to Greece. Now, Mr. Tsipras's comments were negative, or were perceived as being negative, and created a risk-off environment. Now, Mr. Tsipras has been speaking again, also with regards to the actual creditors rejecting Greek proposals. Okay, so that's obviously created a negative environment. So we have weak economic data, and we have the Greek saga continuing, the uncertainty surrounding that. So therefore, a risk-off scenario. So the move higher overnight from the Asian markets has been negated to a large extent. And that's basically where we stand. Weak data, Greek uncertainty obviously still exists, and the market certainly doesn't know whether or not the Eurozone or European project will survive. Now, full document with counter-proposals put forward by Greek's lenders, given the fact that they've been dismissed. Okay, so again, the Greek resolution obviously being downplayed again. Even forced ECBs not to come out and give a pro-QE speech to prevent that. Okay, we have had slightly better personal consumption data out of the US, but given the fact that the US markets are up quite substantially, a lot of that's already been factored into the equation already. Okay, now we also have talk with regards to a potential Brexit, okay, as opposed to a Grexit. So given the fact that the Eurozone or UK wants to leave the Eurozone as well from that perspective, so again that certainly remains an argument as well in terms of trade. Okay, so whether or not that should technically have an impact on the FTSE in terms of weakness. The Mr. Wheel, BOE's Wheel, has also been very hawkish in terms of his commentary and talking about a potential rate rise as well. So not only is the US, we had one of the Fed members yesterday talking up rate rises, given the fact that he was forecasting 2 rate rises. Outcome of talks between Greece and creditors in Brussels still very uncertain. No deal yet. Official close to creditors. Okay, so no deal at all. Also, the latest news with regards to Greece now from Mr. FX Macro. Outcome of talks between Greece and creditors in Brussels still very uncertain. No deal yet. Official close to creditors. So basically, no deal. The market obviously has been short squeezing on expectation of a deal, and that obviously hasn't transpired. So therefore, a risk-off scenario exists this far. Okay. Now that we've covered the fundamentals, let's cover the technicals. So let's start with the German DAX and see exactly where the German DAX is positioned. Looking at a daily chart, German DAX is positioned bearish from my interpretation. The reason why I say that is because the daily chart has held a 75% fib along with the French CAC, okay, and is in the bearish channel. So lower lows, lower highs persist, and the 75% fib resistance and the retrace the movement high lower has failed to has obviously transpired, and the market now finds itself in resistance given the fact that the uncertainty remains with regards to Greece being in or out of the Eurozone, and given the fact that the creditors have rejected proposals on Mr. Tsipras's bearish speech. The breaking news: Wall Street Journal just leaked their IMF counter proposal. Okay, so the proposals and counter proposals, the game of that still remains. Must normalise debt relations, inflation outlook. Okay, so basically no deal as of yet. So if debt release is agreed, if debt feels passable without, I don't see how Tsipras can politically stand up to this new offer. Okay, so basically talk of a new offer not being signed by Mr. Tsipras. So everything certainly seems to be negative coming out of the Eurozone, especially after the markets had short squeezed higher this morning in anticipation of that. or have been over the last few days, given the fact that the German DAX has rallied from 10,800 almost up to a high of 10,600, so almost 800 or 900 points, so quite impressive. But again, like I said, the fib 75% resistance certainly holds. Now the 60-minute chart of the German DAX, let's just observe the 60-minute chart before we move on. And bear in mind the French CAC is also in the same position in the fib 75% resistance. The German DAX basically is a bear flag, so you have this red candle, markets consolidating within that red candle and looking for a potential thrust or a potential move lower. Okay, if I bring up the chart of the French CAC now. Okay, so chart of the French CAC, looking at the daily chart here. Just bring that up for you. And you'll see that it's also similar, it's into its fib 75% on the daily chart too, and certainly is coinciding with the resistance on the German DAX. So as you can see here, horizontal resistance and the fib 75%. If we move to our 60-minute chart on the French CAC, again it's broken out of the bullish channel, is consolidating within that red candle, and certainly seems to be a potential bear flag forming here for a thrust or a potential move lower. So consolidation here, bearish, okay, and then looking for a potential thrust and move lower down to potential 200 MA, and as we all know, we have the unfilled gap left behind, so that certainly remains open and vulnerable to that being closed as well, okay, in terms of the French CAC. Now the Euro stocks, bring up the chart of the Euro stocks as well. If I just go to a daily chart of the Euro stocks first, looking at a bird's eye view or bird's eye perspective. Just allow for this to load up. Okay. Okay, here we go. So basically we have the fib 75% resistance. Okay, so we are into the fib 75%. So if you look at the pivot high to the pivot low, and obviously we're into that zone here. Okay, so from our perspective here, as you can see, the market obviously is holding that fib 75% after the market put a topping tail in yesterday. That certainly seems to be the zone that we are in on the daily chart, which again coincides with the CAC and the German DAX, given the fact that the fib 75% is expected to hold. Now again, everything will be reliant upon a potential deal being reached, whether it's obviously with regards to creditors, and as of this the market thus far, the news flow certainly remains bearish in terms of the deal being reached. So again, this bear flag formation, obviously if that bear flag fails and the market goes back higher, tests the 3650 level, potentially closes the gap up at 3680, but it's all dependent upon the Greek deal being done and its creditors obviously agreeing to that as well. Okay, now the FTSE 100, let's just bring up the chart, the FTSE 100. You clearly see in a 10-minute chart we have a H&S formation, so you have the left shoulder going in here, and again this will be dependent upon the Greek deal. If the Greece and its creditors don't come to an agreement, then you are looking at a left shoulder or right shoulder, shall we say, here. After red shoulder, left shoulder is already in. The head is obviously at the pivot high of 6875, and you are looking for a potential thrust lower. Then you're looking at a 6875 being the head, the neckline being 6834, looking at a 40-point drop. You're looking at around the 6790 region, which obviously is a 200 MA. Now the 60-minute chart of the FTSE 100, again we shall observe, because the 60-minute chart of the European indices, they clearly have a bear flag formation. Okay, so we shall see where the FTSE 100 is currently into resistance. Again, the bearish candle that actually was put in at 11 o'clock this morning certainly seems to be dictating sentiment, and obviously is the catalyst for the right shoulder, and again it's up to Greece. The news flow on Greece will dictate the movements in the market. Also keep an eye on Euro USD as well. Okay, now the Euro USD, the reason why I say Euro USD is because the markets are moving inverse to the Euro USD at present, and as you can see, the Euro is into support. The Euro USD has become a looks like the JPY, or should we say USD JPY, and very similar to Euro JPY in the past. Obviously has become a risk barometer. So if the Euro USD is into support and starts to move higher, then that obviously causes the markets to move in the opposite direction. So if the Euro USD were to push higher from here, obviously that makes exports more expensive, and it's the anti-QE trade, or reverse of the QE trade, and that causes individuals to sell equities and obviously close their, whilst being forced to close their short positions on Euro USD. So you'll see a short squeeze in the Euro USD and a long squeeze in European equities, and that certainly remains a scenario. Okay, so given the fact that US markets are already into resistance, especially the S&P 500, the European markets with weak economic data and a concern or uncertainty regarding Greece, the risk-off scenario certainly remains on the table. Okay, folks, that's a wrap in terms of the actual European markets. Be sure to visit cfds.com in terms of your trading services. Okay, goodbye now.